What's up, everybody? So I've got a lot of questions about how do you handle your taxes and how to save on taxes with your capital gains or AKA dividends or anything you sell with stocks. So how does that all work? What can you do and how to minimize your tax liability? Um, First of all, full disclaimer, I'm not a CPA, but I am, this is what I researched before on different websites that are reputable, of course. You can do your own research to make sure I am correct, but that's my disclaimer. But this is what I've found. So, um, how do taxes work with stocks? Well, first you have to figure out what you're doing for short term or long term. I'm a long term investor because first of all, it's less tax liability, and um, you're actually going to save more of your money this way by paying less in taxes. So um, a capital gain is just what you've gained in your stock portfolio. So let's say you bought a stock at $10 and it raised to 15. We're not taxed in that yet unless you sell it. Um, so short term, if you sell it under a year, you're going to pay that the taxes on that $5 difference. So, you know, you bought the stock at $10, you sold it at 15. You only make sell it or tax on the $5 gain that you had. Long term, over a year, you're only taxed at 0, 15, or 20%, depending on your taxable income or filing status. That is more on you to figure out that part because that changes all the time. Um, as far as short, that's why I'm a long-term investor. So if you keep it in there for more than a year, you're taxed way less. Now, short term, how are you taxed? Well, that's going to be your current tax rate or for your tax bracket. So if you look at the tax brackets here in 2020, you will have a uh, whatever bracket you are in, you will pay that rate on your short-term capital gain. So that it could be 40% even on your short-term stock gain. So keep that in mind when you go to sell a stock. Do you really need to pull it out right now, or could you wait a little longer to pull it over a year to um, have less taxable uh, liability there? But so you're saying to yourself, well, the stock's going up and it's going to crash again here soon, so I'll pull it out and that's going to save me more money. Well, do the math. If it's only going to save you a few bucks, let the market crash as it will again here. Um, I'm saying this on April 23rd, 2020. The market's going to crash again because of all this COVID stuff. That's a whole other subject. If you take out that money, figure out how much that will bring you down to with um, that tax that the tax that you would pay on it, or is it better to let it crash, sell it next year after it's a year old, and have a less tax liability, and it might grow, it will grow again. It always goes up over time, right? Well, how does dividends work? Well, you usually are taxed on dividends. It again goes to your 0, 15, or 20%. Um, Now it has to be uh, there's there's non-qualified and there's qualified dividends. So you have to figure that out with the stock that you are holding and that dividend payment you're getting. Um, that can be found out on your brokerage account, like Robinhood sort of thing. I have a link below for getting into Robinhood as well, but that will be all disclosed in each stock that you might have. So again, you want to think long term versus short term there. But how can you defer these taxes and how can you get away from that? So, what's called your net capital gain for the year. Think about net being your entire year. So I made the example earlier. You have a $10 stock, you bought it at, you sold it at 15. There's that $5 difference. Let's say for another example though, you bought a stock at $15 and you sold it at 10. We lost five. So the two stocks on my example, you're now at net zero. You have no taxable income on that. So that's another way to defer taxes on that situation. Um, Also, is your traditional IRA. Um, and your Roth IRA. So, and same with your 401k. These are vehicles that you can defer taxes or not pay taxes as it grows, right? So you're only looking at one tax portion there. Now that's a whole nother subject of which one works out better for you. Some people hedge it and have both a 401k and a Roth IRA sort of thing. Um, but the growth is more tax shieldable in one of those vehicles is the best way to look at that. Hope this helps out and figures out what you can do with your taxes. Again, I think the long story short is long term. That way you're not paying taxes um, at a higher rate in that short term. Some people can do that, and that's part of their strategy for day trading or something like that. But if you are day trading, it's a whole other tax situation as well. Thanks for following, and have a good day.